All right, on another episode of the Conveyor Podcast. Today we have a very interesting conversation with venture capitalist Jeremy Krell, Dr. Jeremy Krell. We're going to talk about platforms, launching of entrepreneurial platforms to create and influence and shape industries. We're going to talk about niche focuses and being really, really strong in one specialty area. And we're going to talk about what it takes to develop and build a competency as a subject matter expert, getting really close to the thing that you are working on, with Jeremy being a great example of this as someone who actually went to dental school and practiced dental school in the midst of a massively successful business career and investment career in order to pick this part of the world to make a big impact on. And it sounds like he is well underway in making that impact in the world of oral health and dentistry. So Jeremy Krell, the managing partner of Revere Partners, the first ever venture fund focused on oral health. Welcome to the show today. How are you doing?
Quinn, thank you so much for having me. A real pleasure to be here.
Give me a bit of a background on how you first identified dentistry and oral health as a prime ecosystem or subset of the overall venture building innovation wave that has happened over the last 20 years.
Yeah, sure. So look, by way of introduction, I'm part dentist. I am a clinical licensed dentist. I practiced for about a decade. I don't practice anymore, but I'm also a part startup guy. I was a startup guy in tech, in healthcare tech, and in oral tech. So I kind of combine those interests and areas of experience to form Revere Partners and bring that to market within the last over the last 5-6 years. Today, where I'm currently the managing partner of Revere. At multiple points throughout my career, I have formed or taken a platform approach to solve problems. So that I did that at a luxury goods and commodity service startup targeting college students nationally. We did that again with an oral healthcare product, direct to consumer, and then built out other sales channels, and then did that again with Revere. And look, I think that approach is rooted in a few different areas, right? One place it's rooted is in the very problem itself. Just how complex is the problem that you are trying to chase or solve? And don't get me wrong, entrepreneurship 101, will dictate or mandate that the entrepreneur has to stay focused as they build, and they'll commonly hear do one thing really, really well. And that does not necessarily jive with a platform approach from the start. You may know that is the ultimate destination that you're headed, but it isn't necessarily where you start, just building everything, doing multiple things, sort of well, or trying to do multiple things well at the start. But it's where you grow into, right? It's the evolution of your business, and of the many opportunities I've been a part of. These three that I mentioned have really taken that shape. So one thing is in the complexity of the problem that you're trying to solve, the pain point, right, that you're trying to relieve for the recipient of your product or your service. The other area of it is opportunity size, right? You're running and ultimately hope to be growing a business, right? You may form technology, then you may try to commercialize your business. So there is certainly opportunity there when it comes to going after bigger addressable markets. You have to take into account fundraising, right? And investors, especially over the course of the last 5-10 years, really have tended to like ecosystem or platform based approaches. So you have to take into account what is going to be investable in order to kind of solve the problem. And then the last piece of it is you have to understand that sometimes the core competency of your business, the thing that is most scalable or sustainable competitive advantage, the thing that gives you a moat, if you will, often involves other key ingredients to the recipe, right? Meaning that even though there is one key ingredient, your core competency, in order for that key ingredient to be successful and otherwise would not be successful, it needs to have the other ingredients that enable it, right? And so this is yet another reason, to have this ecosystem or platform-based approach.
So the core of this podcast is around communications, but communications in the sense of entrepreneurial leadership, be building new value for a market, professional market. And so learning about the tactical, strategic, philosophical underpinning of this platform approach that you were talking about is really, really intriguing. One area where my mind instantly goes to is this idea that platforms try to solve the problem of having people talk to each other. What do you think about that in terms of the ingredients that you've had to add as you launched your venture capital fund?
Yeah, so there's a couple kind of examples that can be given here. So with our venture capital fund 5-6 years ago, after being a startup operator in the oral health technology space and knowing the hardship that it is to raise money from investors who don't understand what your industry is all about, right? We sort of came down, me and the founding team of Revere sort of dropped down into the dental industry saying, we're going to raise a venture capital fund and start investing in these companies that we know can be successful. We're coming from financial, meaning VC backgrounds, clinical backgrounds, our operator like startup or practice operator backgrounds too, as well as technology backgrounds in the types of tech they're building, from hard tech to software and so on. And we came down saying, we're going to have a very successful fund, right? But what we thought we were going to build a forest, meaning multiple funds, right? A syndicate, right? These other elements, and realized, wait a second here, we're in a desert. We dropped down into a desert. We thought we were going to be building a forest right away, right? And we had to kind of rewind because there was way too much sun, no soil, there was sand, and no water, right? That's an environment for an evolved species like a cactus, to simply survive, right? That was not an environment to plant a forest and expect it to thrive, right? That just wouldn't work. We also knew it wouldn't work for startups. Why would they want our money as a strategic minority investor that we were, sort of presenting ourselves as, if we couldn't actually help them get anywhere, right? Why would on the converse side, why would an investor from the industry invest in us, right, and put their money at risk in venture capital if they didn't think we could mitigate that risk, right? And you can never guarantee in venture capital, but give them a better chance at the risk reward profile that we were pitching to them, right? And so for all of these reasons, we decided, in order for a venture capital fund to be successful, and yes, that is the first thing that we will start with, but in order for it to ultimately be successful, within the venture capital fund, we have to have a very tight diligence process and a very specific portfolio success process that's within the fund. And then in addition to the fund, we would need to build a way to work with the big corporations in the space who are largely responsible for scaling and buying these companies in the end. We knew that we would have to have some kind of syndicate for companies to post themselves, for accredited investors to invest, so that we could see what the industry is doing or bearing on its own, and to allow for some of these smaller or direct transactions to happen. And we knew that we would have to ultimately seed other investment entities coming. We'd ultimately be one or a succession of multiple funds like we've become. But what about angel groups? What about corporate venture arms? What about other traditional funds that become dental interested and have this common problem of the investment services to start a fund, or the fund administration to start a fund? So we created a quadrant for that. So we take this ecosystem approach of having a fund, of having corporate services, of having a syndicate, and of having this fund administration layer that ultimately bring together all of the key ingredients. Yes, do we monetize, in full disclosure, each of those segments? We do, but it isn't really about the monetization for us, right? For us, it is about the learning. It is about the access. It is about the community or network building. That is what those elements, those other legs to the stool are there for.
I have more questions around the platform and sort of solving. I really like the analogy of you wanted to populate the forest, but what you had was a desert. And it's this idea that you develop capital to deploy in a particular area, and the area is a little bit sparse. Like the area is not actually easily identifiable. And so it reminds me of this idea of the crossing the chasm, the early adopter to the early majority. And the idea for folks listening of this crossing the chasm is that when you're launching something new, a new innovation, you can actually get a lot of success with folks who are into innovation, who are into trying new things. And so in your world, it sounded like you probably had some, because of your previous experience with the oral health exit, you had friends in your network or professional colleagues that were into corporate venture capital, which is important for follow-on investing or exits. You probably identified other innovators that launch products regularly, but they would be in this early adopter class using this crossing the chasm approach. And the folks who are, quote, I want to say this favorably, but punching the clock, they're not thinking about their day-to-day from an ecosystem perspective. They're not interested necessarily in innovation. They build cool tech, they launch a company, they do investment when they come across it because they're in M&A, but there isn't really this facile approach to engaging with your neighbor. And that's sort of this desert analogy. And I think that as a communicator, that sometimes there's even a lack of language. Like folks in a industry don't typically use startup lingo, and it's only relatively new that startup lingo, understanding exit dynamics, understanding research and development for products and lean startup methodology, which is obviously different in medical practices because of regulations, hardware development, etc. But just knowing where to go rather than building the wheel yourself. And so you painted a great picture around how your primary skill you want to hone in on is fundraising, but communications is a fundamental part of building this platform out. Do you think that this is sort of you're moving using the crossing the chasm approach? You're trying to facilitate these early majority folks within dental business building, even for things that aren't even necessarily for your own specific benefit, using the syndicate as an example. You're literally willing to create a marketplace of ideas in order to prime the pump for opportunities that you can benefit in the next little bit. So maybe a lot to chew on, but I think I'm framing up how you're thinking about this.
Yeah, so to preface this one, because you hit on a lot of important points there, and the oral health analogy of chewing the pun there is not lost on me.
Yeah,
I've always appreciated a good oral health pun. But to touch on some of these reasons, right? I'll preface it by saying, in any startup, including starting a fund, there's always a million reasons why not, right? And so as founders, we can't base everything on that. We can't put all our chips on why not, because suddenly you'd be building something that is just sort of an antithesis of something that is not, right? As opposed to solving a problem with an inventive or innovative solution, which is why you're there in the first place. But you have to take these into account to some extent. Dentistry is an interesting scenario, as some of you may be in the markets that you're innovating in or investing in or fundraising in. The common lingo that's used in at least the VC world, we hear a lot of frontier markets and emerging managers, right? This is common, and that really applies to newer industries to invest in, right? That have become investable. So this longevity or aging technology, or years back now, the cannabis industry, right? Or some of these newer markets that have come along, regulations have changed, or innovations have changed, technology has changed, consumerism has changed, and new products or services come to market. That's not really the case with dentistry, right? It's actually more accurately this case of new old stock, if I had to put a name on it. Right? We didn't invent dentistry. Dentistry is hundreds of years old. There are, you go back to remnants of dentistry in the way back 16, 17, 1800s. There's very clear examples of dentistry. People have teeth. You need to deal with them in some way or another, right? Whether it's taking them out or filling them with something or dealing with the pain or the infection or whatever it may be. There's examples of this dating way, way, way back. Also, we didn't invent VC or, individually the components of what we built, right? There are consultants who work for corporations. There are, M&A type consultants or BD consultants. There's syndicates that exist that have nothing to do with dentistry, but that exist. There are fund administrators that are out there doing their thing, right? So again, we didn't. This case of dentistry is this new old stock, which is also an equally interesting sometimes opportunity. But I want to preface it there. We hear a lot in dentistry about this. Is it too small? Right? When we first got started, is the industry too small? Could it sustain a fund, or let's say a next larger fund after this? Would you get the amount of deal flow that would sustain a fund? These were a lot of the reasons no, right? Or the reasons of pushback when we got started, right? So here we are parachuting down, thinking that we're landing on fertile soil, finding ourselves having landed in a desert, and then of course, shouldn't have been surprising at that point, hearing some of these reasons for pushback, because they're seeing the desert. Right? If you flip your shoes, right, put yourself in the position of the investor or the startup, they're used to desert, right, which is what they've been living in, right? And so, we've of course found most of this to be untrue. Dentistry is a highly innovative sector. Today, we receive about 3 new applications, startup applications per weekday and weekend, right? And they're organic. We don't pay for them, right? We've diligenced over 1,500 companies. We have the other problem, right? The opposite problem. There are a lot of deals to diligence, making it hard for us to diligence that volume of deals and then therefore, of course, pick the best ones, right? We benefit because we're not really missing anything. We've established that brand. But on the other hand, right, the burden is on us to diligence those. We also, this problem of niche, niche doesn't mean small, right? There's that issue there of synonymous versus, not synonymous. Niche doesn't mean small, it means focused, right? Or in our case, sometimes we say purpose-led, but it isn't small, right? If you're looking at the dental industry, the United States spends about $180 to $200 billion a year on oral health care. That counts no product market, it counts no global market, right? In fact, if you combine oral health with the areas of medical health, so Alzheimer's, if you look at cardiovascular disease, diabetes, some of these other industries that can in part be either diagnosed or prevented or treated through the mouth, it's actually about $500 billion a year, right? So you're talking about a huge industry. It's actually percentage points of GDP, right? But that it is niche and that it is focused. So that's kind of the, a little bit the preface, because each of the things you mentioned there, right, this crossing the chasm approach, this lean startup methodology approach, they're agitated in a scenario like this one where niche is mistaken for small, right, for example, or where your resources, they're there, but they're buried. The startups were there, they just were buried, right? They were living in, very desolate, isolated ways, like the cactus, right, set for survival in the desert. We had to uncover them, right? Similarly, there's plenty of money in the dental industry among all types of investors, but you have to uncover them and prove to them that this is investable and that the returns are there, right? So that there is all based in communication, right? We needed to educate before we could execute. Right. We therefore we put together a private transaction database of about 800 different dental transactions from different private sources. We published 2 papers, we put them out there. We did some other interesting things to get started. We went around, and today we have about 117 advisors globally who are key opinion leaders and key business leaders from around the industry to join our team and participate as an advisor in the diligence process and working as advisors and board members directly with the portfolio companies. So when we turned on the lights announcing that we would have a fund, we were there with research and research papers. We were there with a team of people that the industry knows and trusts already, right, that we've brought in close to know what's going on. And then we started to educate them on the numbers. Here are the numbers, right? Here's what the startup, pipeline and funnel looks like, and the map of different types of technologies. Here's what the return profile looks like. It takes this many years per this type of stage or type of company in the space, right? Whether you're looking at dental tech as software, fintech, biotech, medtech, or you're looking at seed stage, Series A stage, Series B stage. Here's the matrix on average of how they return, right? Putting it into their hands at the level and using the vernacular in the way that they expect it, right? Sometimes you need to convert to the building blocks that they expect, putting it in their language, right? If I'm talking to an investor like a dental practice that grew to 50 dental practices and sold to a private equity fund, that person knows the private equity playbook, right? The organization is going to buy something of that EBITDA and revenue and profit level. They don't necessarily know the venture capital playbook. So we have to go back down to building blocks, right? And show them, educate them the way. Or if you bring in an investor from outside of the dental industry who doesn't know this space, what types of technologies, what stage, how you accelerate them, you have to go back and educate them, right? Is the company trying to be a technology company and exit to a corporate who can put it into their portfolio and, and scale it? Or are they going to cross that valley of death and they're going to try to commercialize the business based on marketing and sales and profitability and try to sell it like that to a later stage, maybe PE fund? Those are two very different things. And while they may know the steps or be familiar with the valley of death or crossing the chasm to get from early to later stage adopters or lean startup methodology and recruiting, retaining people and building that company very leanly, while they may know the concepts, they don't necessarily know how it works in your lane, in your space. And so there is that element of do your research and present your research. There's that element of get trusted people to be a part of your team and talking about what you're doing out there, right? And then there's always that piece of educate before you execute with these people.
Really interesting. You're painting a very strong picture of what I'm calling a lighthouse strategy. So you provide thought leadership in the form of organizing research. So putting out very large, not necessarily large, but just consequential research that's really valuable at the intersection of, venture-backed business and dentistry, getting it out there. And so that's almost like an air campaign to show that you have this credibility. And then you also have this boots on the ground campaign where you said you have something like 115, 117 advisors. And so you enable those through some sort of structure that through word of mouth that they can populate and share that there is, I can imagine, my small town, the city that I grew up in, 400,000 people, there's a startup accelerator. And if there happened to be out of the dental school, which was a great dental school in Canada, a startup that came out of it, all of the angels at that group, they're way too general. They're like generalists. And so that's kind of this desert analogy. And so being able to tap in and have the fastest way for them to be understood would actually enable the local capital, which I'm always a proponent of. I want ownership in my local area in order to build an ecosystem, but they're not necessarily skilled or knowledgeable to know the due diligence to be able to make an investable decision. And so really interesting, this sort of pulling the disparate stakeholders, the new startups, new business opportunities, but also the smart and or learning capital, like successfully exited dental clinic roll up person who might not know VC, pulling them towards you, and then and then finding a way for them to network and organize together in certain ways. The thing that I get hung up on, because I think this is the future, the reason why I have this podcast is because I think that traditional brand marketing and communications, like faceless arm's length communications, is on a downward trend. I think that AI and our lack of attention, and even being able to process and think about new things is most acute when it comes to brand new relationships. It's very hard to develop trust with brand new relationships. And that's partially because we simply don't have time, first of all. But second of all, we don't have the same level of trusting intent with new opportunities. And so what's really important is arm's length relationships, and not only arm's length relationships, referrals. The way to grow your network is through a referral. So you know someone and they tend to know someone, and that's how you build this sort of chain of trust. And so I think that platforms, the idea of having advisors in different regions, creating a hub where you're sort of like a center of excellence, developing thought leadership, best practices, and then promulgating it to different areas where there are these different sort of ecosystems of trust, is incredibly valuable. My challenge, being a little bit earlier stage, being way more earlier stage than you, is like, how do you kickstart and prime those platforms? The notion of building a giant research report, let alone identifying 120 advisors, and then sustaining their engagement, seems really challenging. And the solution I'm thinking is like having enough of a runway or funding to be able to invest in that level of community engagement and communications. What are your thoughts on that?
Yeah, I'm going to approach this, I think, in two different ways, because you bring up some valid points. And the first thing I'll say, maybe you hear this in an athletic class if you take them, or from a trainer, or something like that. But modifications are okay, right? Even if the instructor in the athletic class is telling you, the speed or, cadence should be this, or the resistance or weight should be that, right? It is actually more important in the earlier stages to get your form down, right? Say even learning a new sport, right? It isn't about hitting, say in tennis, a winner on your first shots. It's about getting down the basics of the form. How do you serve? How do you hit a forehand? How do you hit a backhand? How do you hit an overhead, right? How should footwork, right, start to work? These are basic elements of form. So modifications are okay, right? Yes, I came from a startup background, and we, luckily were successful in this space. That enabled me, yes, to right off the bat know, a bunch of corporates, a bunch of advisors or leaders or investors in the space. Like it did help me, right? I in starting Revere, given my startup background, I came from an area of privilege. This is one of the reasons why you might hear getting into VC is quite hard, right? There isn't a pathway from business school or from consulting firms or from banks that goes straight to VC, because a lot of it is based on, well, do you understand the startup as a beast and how it ticks and works? Do you have the network that can, build and sustain the fund, right? It's such an ill-defined, my space, such an ill-defined space, because it has some of these intangibles you have to sort of piece together. And if you don't have the right background to do it, right? It makes it a lot harder and therefore a lot more risky. But applying it to some other spaces, in every company, every product, every service, they're a little different, right? Some people are selling a very important widget, but one that is easy to understand or very affordable. And so they have a whole different, sort of approach and set of challenges compared to somebody who's selling something, a service, for example, that's much more complex. We sell at Revere with venture capital, we sell a financial service, right? So I'm going to get into that, and that's the second part. I'm going to get into that in a second. That's a complex sell, right? And to your previous point of building trust or trusted networks, right? If AI takes over in processing information and decisions for us and starts to remove relationships from the equation, and yet you have these important things like investing your money that we all have to do for wealth building purposes to some extent, right? But investing your money requires understanding the investment, or at the very least, having some trust relationship with somebody who does understand that investment, right? You have a problem there, right? Because we're over relying on things that remove it relationship, but then you have these very important complex things that require relationship, right? So we can't have AI and, informal, communication and information processing systems, essentially lead to a downturn of doing some of the important things we still need to do that are based on trust, right? We do have to be able to parallel process those things. That's a separate thing. But to finish my point on the first part of modifications, yes, we built a pretty large network pretty quickly. Yeah, we put together a pretty large database and some pretty decent research papers from the start. But even if you instead of putting together a research paper with 800 transactions like we did, if instead you put together a case study of 1, 2, 3 people with a problem that dedicate, show everybody what the solution would be if they had your solution in place, what impact it would have. If instead of bringing on, forget about, having 117 advisors, right? But what if you just had 3 to 5 with areas of expertise in your background? You have to do some networking. You got to show up to industry events. You got to get referrals to some of these people. You got to reach out cold on LinkedIn to some of them. You got to find some common ground or connection to talk to them and open up the conversation. Yes, there is still that component to it, but modifications are okay for the size of the business that you are and for the stage that you're at, right? You don't have to necessarily do it on a big stage right from the start. And that may be more reachable for certain founders, based on their past versus others, and even more appropriate. Some of them, it's just not appropriate, right? To have some product or service with 120 advisors be very odd, right? For us, it made sense. We're turning on a new thing for the whole industry and getting them to understand it. And we need their expertise to help diligence these deals. It's a very different thing maybe for us than for your, a much more typical product or service innovation or scale up. You don't necessarily need an advisory board. That, in fact, it'd be frowned upon. How would you ever use that many people, right? So modifications are okay. That's part one. Part two was, is that element of trust, which I touched on before, and, complex things like finance or healthcare or, some other areas that are just generally complex cells or are service cells. They are harder. You do need that trust element. It really helped us to break down the bits of understanding, getting the other people to understand, because we saw this problem too. And you sort of referred to this sort of, kind of pathway of referrals in what you had said. We actually saw a problem with that. Dentists make a lot of money in the dental industry through the practice of dentistry. They do not get a lot of business training, believe it or not, even though they are the de facto business owners of their practice. They take that money and they invest it somewhere. They have to invest it somewhere. They don't just put it into checking accounts and savings accounts. So what do? They rely on their financial advisor, their accountant, and their buddies, right? Their friends from dental school or neighbors, whatever it may be. People who are telling them, some of them like financial advisors who are paid based on what they tell them to do, right? Telling them to put their money in certain places. So where did dentists mostly invest? We found they invested mostly in mutual funds and CDs and stocks and bonds and in real estate. None of those things are dental, right? Besides investing in themselves, in their own practice, of course, right? I'm excluding that from the equation. They don't invest in the technology, all the things they use. Their only involvement with the dental technology is that they would negotiate some sort of a discount. Instead of paying $100 per practice per month, I want to pay $80 per practice per month. They get this $20 per practice per month savings, right? They'd consume the product, and if they like it, consume more of it. They would even recommend it to their friends. They do referrals. They would even give feedback, whether they know it or not. The companies, they were either actively giving feedback or passively giving feedback to the companies who are supplying those products, right? But they had no ability to capture the upside. Never even thought about capturing the upside of those products. Never even thought about investing in a way like venture capital or angel investing invests for the most part in the industry before we came around. So the way we started to talk to them to start to build these numbers was all based on breaking things down into bite-sized bits. We would tell them, invest in what you know. We'd ask them 2-3 questions about a real estate investment or a mutual fund. They're lost. Not because they're not smart or don't have the intellect. Of course they do. They're just not trained in the area. They know nothing about it, right? We ask them 2, 3, 4 questions about a dental technology. They'll tell you the world about the dental technology. So we get into this investing in what you know bit with them, for example, right? We start to break things down, right, into a way that shows them you can have the upside of something like this, not just use it, right? You can help retain staff. If your other staff or your other colleagues, your other partners or business owners, if they have equity in the stuff that you're using in the practice, that might be a retention strategy for you. And dental practices, like other healthcare practices, suffer from workforce management problems like staffing and retention, right? So we start to put venture capital in dental technology in the terms that each individual investor type needs to hear them, right? And that becomes a critical way to get to the levels or the numbers that you need to reach. Again, combining it with the first topic, with modifications that are there, appropriate for your stage or your type of business.
This has been an enlightening convo. I like the idea of breaking it. The modifications is really good. So form over, I'm getting back into golf right now. So just focus on what you can manage, which is the form, and the results will come. There is something to be said about, practicing incorrectly. So have a network around you that means that, it's not 10,000 hours. It's like 10,000 hours of the correct practice that makes you an expert. But I really appreciate the call. I know that we've ran over sort of the allotted time, but really grateful, Jeremy. Is there anything you want to add, any tidbits before we go here?
No, I just always an open door here with me and at Revere. If you're interested in more information about Revere Partners, you can go to reverepartnersvc.com. You're always welcome to, of course, if you're interested as a startup, you have something that's related, or an investor interested in investing, you can always reach us at Jeremy, Jeremy, at reverepartnersvc.com. And I thank you, Quinn, for the conversation. It's always enlightening on our side too, to hear the approach of communication, to help startups in their earlier phases, whatever industry that they're in. Always really important topics, and several of them and their frameworks covered here.
Thanks a lot, Jeremy. Until next time.